how really successful people get ahead is they don't always spend time focusing on what they don't know or what they can't do. They really
Yeah.
focus their time on what they can do and what they're really good at, and find a team around them with
Yep.
shared values and purpose, but complementary skill sets.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, excited to have Vasu Kakarlapudi. Did I get it even close?
That's pretty good, Todd. Pretty good. I'm proud of you.
Not too bad. Why don't you say it so our listeners get the real, pronunciation?
Yeah, Vasu Kakarlapudi.
Oh, I was so close. I just
Very
kind of
close.
butchered a little bit, but
Yeah, not too bad at all. Not too bad at all. I've heard a lot worse, Todd.
Love it. So Vasu, a little bit about him. He founded Apta Properties, where his mission is to extend those passive income opportunities to surgeons, physicians, and others who are looking to create more personal freedom. A little bit about Vasu. He was born in India, raised in Kansas City, and wanted to become a professional baseball player, but instead became a doctor and of course now a real estate professional. So, look, a lot more to be said. You did medicine for many years.
Still do medicine, actually.
Still do medicine, right? Yeah. Surgery, ear, nose, and throat, a head and neck surgeon. Just a lot of great stuff, and of course, real estate as well. So, with all that said, anyways, it's boring for me to tell it. So why don't you tell the rest of your story to our listeners, kind of what you're doing right now, and maybe your journey a little bit, and we'll dive in.
Yeah, absolutely. Thanks for having me on, Todd. Pleasure. So yeah, my baseball career was ended short. You alluded to it earlier, not by my own volition, but because I couldn't make the high school baseball team.
That happens.
That is one of the prerequisites to get into the pros, is you got to play on your high school team. So that was strike 1, 2, and 3. So so I went to medical school, like a lot of other brown kids who did good in school in the Midwest. Went to college medical school in Kansas City, and kind of really fell in love with ear, nose, and throat surgery due to kind of the delicate nature of surgery and making a significant impact on folks in the middle part of their career, middle part of their life. So my wife's a dentist, so my wife and I started our careers in Louisville, in southern Indiana, New Albany, Indiana, suburb of Louisville, and kind of quickly realized that, we had more zeros behind our paychecks, but didn't have a lot of freedom, and kind of looked around and saw the people that were practicing medicine who really enjoyed it were the ones that had passive income from other sources, so that they could kind of work towards work in medicine and surgery for fun. And so really that really started our journey back in 2004-ish, started practice in 2003, and very shortly thereafter kind of looked at opportunities to be able to leverage our professional earnings so that we could practice our educated craft for fun and enjoyment, and for the passion of what drove us into medicine to begin with. So that really kind of started my journey, and one step led to another. I found mentors along the way, and talked to a lot of people, did an MBA in entrepreneurship along the way, and just start off small, like a lot of other your listeners and your podcast guests. Learned from each deal, and made mistakes along the way, made plenty of mistakes, and but picked myself up and learned from those, and really kind of I've been very, very fortunate to have a team of people around me who help support and guide and mentor me, and just kind of really completed another round of real estate school, just like medical school and residency and training. And you don't start off with doing large deals, you start off with learning about the medical terminology, and then finding professors who help you and get furthering your education. And then just, one step leads to another. And, 17, 18 years later, we're, our passion is really to kind of pay that forward. We've been very lucky and very fortunate. We've worked hard, and at a point now where we are, able to practice surgery and, ENT surgery for the joy of practicing ENT surgery. And we want to, pay that forward to other professionals so that they can, do this for fun and help their patients in a more compassionate fashion.
Love it, man. I love it. I love the purpose of it too. And, you're doing it to kind of create some of that freedom so you can do what you're passionate about, which is still being a doctor, right? Still helping people out. And you're trying to create that same type of freedom so other people can do the same thing, not so you can, quit your job and go live on a beach in, Tahiti or something like that, which maybe you'll do in the future, but that's not the passion. That's not the reason for it right now. And so I love kind of the thought and the reasoning behind it. So take me through kind of the earlier stages, maybe the first deal, the first couple deals. What were you doing? How'd you really get connected and into the business and decide that that this is something that's going to stick?
Yeah, I mean, I think, I read a lot of the books and listened to the podcasts. Were kind of rare and far between at that point, but a lot of the books, the Purple Book, the Purple Bible, the Rich Dad, Poor Dad, and thought, okay, well, you can add to your asset bucket, and that asset bucket can help you generate passive income so that you can move from the cash flow quadrant, move from the left side to the right side. And then all of a sudden you win the game of cash flow when your passive income exceeds your monthly expenses. Guess what? Nothing else really matters at that point. So, that was the vision. And then you thought about, well, how can you do that in the most risk averse way? Because, ENT surgery has a lot of risks. Okay. You got the brain on one side, you've got the eye, the brain fluid, smell centers, blood vessels, nerves, just all kind. We're operating in a series of landmines. This area is just, high dollar real estate. Okay. And so you've got to be risk averse in everything you do. So it was part of my DNA as training as a ENT head and neck surgeon, is that you've got to be very risk averse, and you got to go from one known landmark to another landmark. And that's essentially what we did. I spent some time learning about real estate for a couple of years, really, before we actually even executed on one deal. And that may have been overboard. I didn't have the same educational resources that we have now. This was 17, 18 years ago. But really kind of learned the basics, just like the first couple of years in medical school, where you read about the basic science. And then the last half of medical school, you go in and you work with other professors who kind of guide you. And I did the same thing. I found some mentors. One of the things that really helped me was humility. When I went to real estate guys and gals, some of which were my patients, and here I was their, ENT surgeon. But one of the things I found was that if you're humble and you go and not with a big head, like, hey, I'm like, not like Alec Baldwin and, in Malice, where he was like, I am God. As a surgeon, you go in there as a very humble, like, hey, I may know surgery, but you know a lot more about real estate than I have ever thought of. And so can you teach me and can you guide me through this process? So I would spend time, after work and on the weekends, following guys and gals who did real estate full time to see how they did things. So it was kind of like my second half of medical school, is my second half of real estate school. And just learned from them about, how to get started. So it really just started with a single family townhome, and ran into this simple problem that a lot of people on your show have probably figured out, that's very hard to scale, especially back then. I know there are some people who are scaling single family now, but back then scaling single family was very, very challenging. So, made a little bit of money.
And you're probably putting in a couple hours a week at the office, I would imagine.
At that point in my career, I was putting in more than a couple hours a week.
Yes. So to manage a single family rental portfolio, even if it's just a couple,
Yeah.
It just got to be very challenging.
Absolutely it was. So kind of quickly realized, well, listen, we need to leverage a team. So I read this book called Strength Finders. And the premise of that book, for those of you who haven't read it, is really about, how really successful people get ahead is they don't always spend time focusing on what they don't know or what they can't do. They really
Yeah.
focus their time on what they can do and what they're really good at, and find a team around them with
Yep.
shared values and purpose, but complementary skill sets. And so that's what I was really out to do, was to find a team around me that could help. And obviously it's much easier to scale in commercial. So as we, kind of started in, very basic stuff like triple net leases, single tenant triple net stuff, generating a little bit of cash flow that wasn't really super time intensive. Along the way, again, I was fortunate enough to have some mentors along the way that were working on some development projects and senior care. And so got a chance to kind of get involved with that. And then quickly kind of realized that, hey, there's a bunch of us as physicians that can band together and create our own real estate opportunities, right? So why not we do our own owner occupied stuff? So we built a surgical hospital, and we had an operating entity and a real estate entity, and so we got people involved on both sides of that fence. And then in our primary practice, we kind of talked to my partners about building our own office. And initially there was a lot of hesitation because they're like, we're doctors, we don't know about this stuff. And I'm like, just trust me, guys. I've done this before. Here's the evidence. Here's my, I baited this on myself. Okay. I took all the risk and went to the School of Hard Knocks on my own capital.
Yeah.
And now we can do this collectively with all of our capital, so we can share in the benefits of this. And it's de-risked because I've already made all of the mistakes, and so
trust me, guys, just give me your money. Trust me.
It took several acts of Congress. But what finally did it, I said, listen, guys, I made my partners a guarantee. I said, listen, if we build this office and any of you guys want out, I will buy your share, okay, at the price that you put in, so you can't lose money. Because ultimately then I realized, man, this guy really has skin in the game.
Yeah,
and
he's ready.
People finally realized that, hey, listen, this is a golden opportunity, because one of the largest risks in commercial real estate is who's your tenant base.
Yeah.
And if your tenant base is yourself, I mean, why not bet on yourself, right?
Right.
What better bet is there than to bet on yourself? And so that started a series of medical offices that we built. So we built one, and my partners were like, oh my God, this actually does work out the way that you said it would work out. And so we built another,
So were you building the others? Are you building for other practices, or is it?
No, just our own practice. We're in
just
a big
your own.
Yeah, we're 14 doctors. So
so as
offices all over town.
Yep. Okay.
So basically, as leases expired, we're like, okay, 2-3 years before a lease expired, we would acquire the land, find a development company, and
then build.
Yeah, and then build.
And that would be then your new lease. That makes sense. Yeah, it's funny. You are the second person in probably 2 weeks I've talked to about a similar strategy. Maybe you guys are partners on some deals. I don't know, but it sounds so. I mean, it's just a great way to do it. You're owning.
Well, I've talked to a lot of surgeons and doctors about this all across the country. So maybe we did talk.
Probably other people doing it, potentially because of what you've started. Because what a great idea. You already have the practice. Why not own the real estate? Why not control that? Right. And be able to capitalize on that opportunity as well.
Yeah, absolutely. And it's turned into another income stream, not just right now during our working age, but also it turns into another retirement vehicle, essentially, that creates income that supplements your 401k when you want to call it quits.
So how does that work? Explain that process. You want to call it quits, you want to get out, you own the building, or at least a portion of the building. Do you sell then that portion potentially to somebody who's kind of stepping into the practice, or how does that?
Yeah. I mean, our goal was to try to align align interests as much as possible. So even though we had an operating entity and a real estate entity, we studied a lot of models that failed. And one of the main reasons that stuff failed is because the ownership group on the operating entity didn't match the ownership on the real estate entity. And so then you have a higher propensity of having hard feelings because all of your incentives are not aligned.
Yeah.
And so we tried to structure this, and we have structured this to we want all of our junior physicians, as they initially become employees, but as they become partners in our professional practice, we're strongly encouraging them and giving them a significant discount off of market value to join the real estate entity. Partly because, we want to make it easier. We want to lower that barrier to entry. It's not open to outside people, obviously. It's a benefit, it's a fringe benefit of partnership. So we use that as an attraction, as a tool, a recruitment tool, because it's really hard to recruit doctors these days. And we want to provide ancillary revenue streams within our ecosystem through real estate. And so the goal is to stay into this while you're in practice, and then once you retire, we've got some carve outs so that you're not immediately withdrawn, but kind of gradually withdrawn at, the way our operating agreement is structured is essentially, the theme of it is that you get out over a period of time, at a time when the existing partners have enough cash flow to buy you out. So the goal is to buy you out on retirement, but it doesn't happen right away. It happens. We have some flexibility to be able to time that at a time that is, beneficial to all parties.
That makes a lot of sense. All right. So, and are you guys pooling money or partnering together on other real estate opportunities, or is it these offices buildings that you're also occupying?
Yeah, I mean, we pretty much built all of our offices now, so that's a kind of unless we really were to expand and hire a whole bunch more doctors, we're pretty tapped out on that. But what we are scaling right now is doing a lot of multifamily. So multifamily being the most, demographically oriented asset class within CRE, and one that you can really kind of study, and you can base a lot of the performance of that based upon demographics. Especially we're in that kind of that B to A- grade in high growth markets, which I know a lot of people are chasing, but a lot of people are chasing that because of the strong demographics. There's a reason why a lot of people there's a reason why people are investing in Dallas and Atlanta and Charlotte, and Austin, Texas, and those kinds of areas, which is where we're investing. But we take a very conservative approach. We're not overly leveraged. We're not doing heavy lifting with value add stuff, but late 90s to 2010 to 15 kind of range, build larger scale apartments that 200 unit plus in that B to A- grade. That's where institutional capital is starting to get into as well. But we feel like our model has been successful for over 15 years and does well in good times and bad times. We're not overly levered. We use a lot of fixed rate debt. We don't do a lot of bridge debt. Good, solid, stable principles that do well in good times and bad times as well. And we don't, we're still standing, in 7 and 8 and the European debt crisis and the pandemic, and even now, despite all the changes that's happened in the economy recently.
Speaking of the changes, so you've been around for a while, 15 years in multifamily, and what'd you say, 17? Overall.
Yeah.
So speaking of changes, like it's on everybody's mind. I think even by the time this comes out, it'll still be on everybody's mind. It's been for a while. So what are you guys doing right now? Is it pencils down? Are you looking for opportunity? Are you excited about what's coming? Like what's the thought right now? And what are you guys looking forward to? What are you guys avoiding? That type of thing.
Yeah, I mean, I think the biggest thing that is moving in our favor is that there's still a lot of demographic tailwinds that are supporting the multifamily industry, and especially in the asset class and the grade that we're looking at. not the new high sexy stuff, the brand new things that people could maybe move in from home ownership to the A plus, and not the C grade where they're a lot more sensitive to the economic cycles, right? In terms of, collections and so forth. But in that middle grade where, people can rent, people can buy, but generally there's a psychographic preference towards rentership. So we're trying to take advantage of that in high growth markets that have diversified economies. So that on the supply demand front, there's still an imbalance, as you're well aware, Todd. I mean, there was no construction during the Great Recession and a few years after that. So we still haven't caught up to that. So and with the amount of household formation, and all real estate's local, but on a macro level, there's still a housing shortage, which is even more acute in the high growth markets where there's positive net domestic migration. So so we still feel good about that. Now, in terms of challenges, I mean, I think obviously the cost of debt has gone up significantly, right? So
yeah, 3% to 6% is a bit of a change.
Yeah, exactly. And so our model is that we're not overly levered. So we don't take on the 75% debt LTVs. We're in the 50 to 60% range. So we sacrifice a little bit of yield that way, but we insulate ourselves. And so we've tempered expectations for our investors and ourselves that, hey, we're not going to see 25% rent growth. It's just not sustainable. Yeah. But in the markets that we're looking at, in the submarkets we're looking at, we're still able to be well under that. We're still in that 20% range in terms of rent to income range. So we feel like there's still some room for growth, that we can take advantage of the supply demand imbalance and still not get into a major affordability problem. So on the revenue side, and then on the expense side, a large part of our expenses, is debt. And so we've carried fixed rate debt with rate caps that we're taking advantage of, and it's going to be harder to pencil out future debt. But we've been fortunate. We've been fortunate to be able to find people want to lend to people who've got a good balance sheet, and so we've leveraged the strength of our GP team to really get some favorable terms. They understand our conservative underwriting, and that we're not swinging for the fences, and we're not aiming for the investors that are trying to get 25, 30% IRRs. I mean, we'll do that in a bull market, but you've heard the adage, right? That when the tide recedes, you get to see who's naked, and we want to have our bathing suits on for sure. So we're pretty conservative in the way we underwrite.
Yeah. Are you selling your assets? Is it the typical 5-year hold, or are you guys more long-term?
We're more long-term hold. We did sell an asset recently in San Antonio because we got an outsized offer that was too good to be true, that we were basically getting returns for ourselves and our investors that was 2-3 years into the future. And so we're like, okay, it's our fiduciary responsibility to sell. But we're in a fund product that's a 7 to 10 year hold. So we might recycle some of that capital within that fund cycle strategically. And if we can harvest some equity and increase our yield, we'll do that. But again, we're not flippers. We're trying to ride long-term demographic trends. And then at the end of the fund cycle, if we've got a really high performing asset that a lot of people want to stay into, we can just transition that in from a fund environment to a single asset environment as well. So
love it. Well, Vasu, what's a mistake that you've made, and how have you learned from it?
I think the biggest mistake that I made initially was trying to do too much on my own and not sharing the vision and the passion and finding people around you to help, because real estate, as you know, is a team sport. And initially I was trying to do everything myself, and it was just like, oh my God, it's too much, then I basically was stretching myself thin. I was causing myself a lot of stress. And then, quite frankly, I can't be good at every aspect of real estate, and you can't, I can't, nobody can. And so the really, really successful, but then I started, I'm a big student of success stories. Like I one of my passions is to be able to tease out success patterns. As our mutual friend Trevor McGregor says, success leaves clues, right? And so even before I started working with Trevor, I was like, okay, I understood that concept, and I was like, okay, well, other people have walked in my shoes before. I don't need to reinvent the wheel completely. I can learn from my mistakes, but I can also learn from other people's mistakes. And so I think I probably had the more do-it-yourself kind of attitude earlier on in my career, and it ended up stretching me thin and causing me stress and making some wrong assumptions because I was, quite frankly, not as proficient at certain areas than I wanted to be. So yeah, so I think that's one of the big things I made a mistake of when I was early on in my career.
Yeah, I hear you there. I think I constantly make that mistake still, even to this day, It's
Yeah.
like you just try to do too much on your own. You think you can do it all. I have slowly, as I've aged, realized that that's a mistake, but I still seem to make that mistake continuously and go, I should have probably given that to somebody else. Like that's not my passion, or that's not what I'm good at.
Yeah.
Maybe I should have handed that off.
Yeah, it's a journey. It's a journey, Todd. It's a
It
journey.
is. It is. I love it. Um, what are some daily habits? I mean, you got to be a busy guy. You are still practicing medicine. You are running a real estate company. You're talking with investors. You got a lot going on. So, what are some daily habits that help you kind of juggle through all of that and still, go home at night and um, not be completely exhausted, just fall asleep on the couch? Or maybe that's what you do.
Well, I try not to. I've always been one, Todd, to respect my sleep. And
Yeah.
so even in medical school, or like if I made sure I got at least 7 hours of sleep, 7 to 8 hours, preferably eight. A lot of people were cramming for tests, and I was like, not that I was maybe more prepared or less prepared than anybody else, but I was like, listen, if I didn't know it at 11 o'clock at night, I'm not going to know it at 2 o'clock in the morning. So I was just going to go to sleep. So
Yeah, and you'll probably do better at the test if you get some
yeah,
sleep versus the
yeah,
guy that shows up or gal that shows up and they're just completely out of it because they stayed up, never went to bed. And
yeah,
like,
yeah.
yeah,
But part of that daily routine starts the night before. I guess that's where I was trying to get to, is
yeah,
like, making sure that you're getting to bed at a reasonable time. And one of the things I've started practicing in the last probably 6 months or so is a gratitude journal, where I write down three things that I was grateful for that happened that day, small or big or whatever. And it may be as simple as, hey, I watched my kid play tennis and it was really entertaining, or I had a really nice meal, or it doesn't have to be anything about business. It doesn't have to be anything about anything big. But I also write down three things that I'm going to be focused on doing the next day. So it kind of gears me towards kind of getting prepared for the next day.
yeah. I
And then
love that.
waking up, I meditate in the morning, and then I go to the gym. I do some kind of physical activity after meditation, drink a lot of water, and then start my day. So that usually gets me. Again, it's not a perfect world. I don't get a chance to do all that stuff every single day, but I try to get the vast majority of the days where I accomplish those things. And so between meditation, good sleep, gratitude journal, and exercise, that at least lays the foundation for me to have the best chance of having a good day.
Yeah, and those are really, I would say, mine as well. I guess I replace meditation for me with prayer, but it's the very same thing. And as same thing, you don't do it every day. Sometimes you miss out on it, but the more you can do it, it just feels good. Feels for me and I'm sure for you, it just makes it feel like you're ready to go on the day.
Yeah,
Um, and as you miss them, the more you miss them, they're just like, oh man, you just feel like you're missing out. And I feel way more productive when you do those habits. I think habits just help create productivity overall in general. And
absolutely.
it doesn't have to be that you do the same thing as me or the same thing as Vasu. Is like you just have to have habits. If you have those certain habits, you're probably going to be a lot more productive in the end.
Yeah.
So I love telling crazy stories, fun stories, weird things that have happened in your real estate journey, or maybe just your medical journey. Of course, you probably can't, disclose some stuff with your medical journey, but I just love telling, stories. It's Halloween in a couple days, and then when this will come out, it'll be well after Halloween. But in the Halloween spirit, I just want like a horror story, or like just a crazy story that's happened along your journey.
Yeah. I'll share
I'm
with you
putting you on
one.
the spot. I didn't tell you this was coming.
No, 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 no. I'm just jogging my memory. I
Yeah.
think I think I've got one that maybe might resonate with everyone. So, as you know, kind of ENT surgery is very complex kind of things where you spend a lot of time learning the anatomy and then practicing with a professor next to you, and then finally you go on your own and you go out and practice. And so I joined a guy in a small town outside of Louisville, just on the other side of the Ohio River in New Albany, small town. And my chairman in residency, Dr. O'Malley, a real nice guy, my strong mentor during training. And he said to me, Vasu, make sure that whatever happens to you in the first year or two when you're in practice, you want to make sure that nothing bad happens to any of your patients, because the community is going to feel like if something bad happens to you at the beginning, that you did something wrong. Whereas down the road, once you've established your reputation and something bad happens, people will say, oh, well, sometimes bad things happen in surgery and medicine. People know the risks. And so you're a lot more insulated. So with that backdrop, a month or two into trainings, the fall of 2003, one of my partners had a head and neck cancer patient that he said, Vasu, can you mind just doing a quick little biopsy in his larynx or his voice box? I'm concerned he might have recurrent cancer. This is an older guy, 80-year-old guy. And so I said, sure. My schedule was empty and his schedule was full. So in the pre-op area, the wife gives me a big hug and she says, Dr. K, just don't let him die. Don't let him die. Those are her words to me. And so I get ready to go to the operating room. And before I even got the chance to start the surgery, the anesthesiologist who gives them the anesthesia is trying to put a breathing tube in this patient's throat. And I look around, I was like, this doesn't look good. I can hear the heart monitor going, beep, beep, beep. And it was like, beep, beep, beep. I turn around and the guy is basically blue. Okay.
Oh, wow.
We haven't even started the surgery yet. The wife just gave me a hug, said, don't let him die. I haven't even done anything yet. And the guy is blue. So we're airway doctors, okay, as ear, nose, and throat doctors. And so we're the experts in the airway. And so essentially the anesthesiologist couldn't get a breathing tube in. He lost his airway. He was not having any oxygen, not getting any oxygen to his brain, to his heart. He turned blue because his heart wasn't pumping anymore.
Yeah.
And so essentially I couldn't get the breathing tube in. So the last resort is to make a hole in the neck, okay? And you got to get an airway in quickly. Like you can't go and read a textbook and figure out how to do this. You got to do this now. Otherwise this guy's going to die. He's as blue as the sky. Okay. And so I'm yelling for a knife and blah, blah, all this other craziness is going on, all these crazy thoughts in my head. But when push came to shove, I was able to get the breathing tube in, make an incision in his knife. And somehow through the fact that I was able to do that, and I got lucky that this guy had enough reserve, because sometimes you do all that and the guy can still die because sometimes that bad stuff happens. But somebody was looking after me. You mentioned prayer earlier. I don't know if some angel was looking after me, but as soon as we started getting oxygen into his lungs again, he pinked back up. He survived. He lived. Man. Okay.
So that guy was just happy and blessed that he had you there as a doctor.
The take-home lesson in that, because I'll share with you one of my vulnerabilities is I've suffered from imposter syndrome for so long. Like I thought everything that's happened to me is like, I'm not good enough. It's just whatever good happened to me was through luck and not through my own training and my own hard work and everything else. But that was like one of the major tipping points in my life, because it taught me that, listen, I went through all this training, college, medical school, 5 years of surgical training. And when push came to shove, I was able to perform and do what I needed to do when no one else in that room was capable of doing that. And we saved this guy's life. And it really started my journey towards knowing that, hey, if you put in the work and the effort and the time and the expertise, you can do great things.
You can
And
do
so
great,
whether it's
yeah.
medicine or
So
surgery
cool.
or real estate, you put in the time and the effort, you can do great things. But you can't do it without putting the time and the effort and getting trained and making a few mistakes along the way.
Yeah, so true. Such wise words. I mean, if you put in the time, if you put in the effort, if you make those mistakes and learn from them, right, and just continue to push and surround yourself with good people, then you can become the expert. Then you can have the success, and it's not just luck, right? It truly is because of what you've put in. So that's so cool. Okay, a couple last questions. What is a favorite book, maybe that you've read recently or that you're currently reading? What's a favorite book you could pass down to our listeners?
Yeah, I'm a big fan of Dan Sullivan and Ben Hardy, so I'll give you two because I've read both of them. But Who Not How,
Yep,
um, I don't know if you've read that book, but it's
love it.
basically, we talked a little bit about doing everything yourself, and that book kind of crystallized, hey, when you're confronted with an issue, the first question maybe you should ask is, who can help me with this, rather than how can I do this myself?
Yep,
Um,
yep.
and then the second book is The Gap in the Gain, that was published after that. And just for your listeners who may not have read that, it's basically, if you can kind of start with reminiscing about where you are now relative to where you were X time in the past, and focus on that, and that's been your gain, you're more likely to achieve the gap, is where you want to be and where you are right now. But if you focus on the gap, it makes it much harder to get there. And so
Mm,
part of
yeah.
I want to credit Ben Hardy and Dan Sullivan for part of my nightly ritual of doing the gratitude journal and 3 things I'm looking forward to the next day. I started doing that after reading that book because it made a lot of sense to me.
Love it. Love it. All right. Last question before we wrap. What are your 3 pillars of wealth creation?
So I think one of the key things is humility, to know, um, what you don't know, and which is a big issue in the medical community, because we're kind of trained as surgeons to be macho and
Yeah.
like we know everything. We flex our muscle. We want to show our chest hair, and
Well, you're the
having
smartest ones in the room, or at
yeah,
least you've
yes, yeah.
got the most amount of school,
Yeah, exactly.
Yeah.
So I think humility is super important. I think commitment to lifelong learning. So
Mm.
in other words, there's always something new that you can learn. And if you think the learning stops at school, you probably shouldn't be a more active investor, because you've got to constantly be learning. And then lastly, I think is, the mentorship and finding people and building a team around you that can help complement, because you can't do everything about wealth management by yourself. You need a team of people around you, and you want to be maybe the architect of your wealth plan, but you need people around you to help support you.
Yeah. Yeah. So true. So true. Man, look, this has been great. Love the stories, love the journey. How can our listeners get in touch with you, learn more about what got going on, and reach out?
Yeah, certainly through LinkedIn. I'm active on LinkedIn, Vasu Kakarlapudi, MD, or I think learn a little bit more about our mission and our passion at www.aptaproperties/webinar. And there's a good link to a piece I've recorded, kind of explains kind of what we do and how we do it. And happy to reach out through LinkedIn as well, or they can email me as well.
Basu, appreciate your humility and just the overall just willingness to just be genuine and be providing us with some great value here. And just again, really appreciate the time you've spent with us, and it's been a lot of fun. So
Yeah.
with that, man, you have a fantastic rest of the day.
Yeah, thank you for all you do to support the mission of the pillars of wisdom, our pillars of wealth, to the community around us.
Love it. Love it. Have a good day.
Thanks.
Hey, thanks so much for listening. I appreciate you being a loyal listener. Say, I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.